Hello, and thank you for joining us at xm.com for this Forex Preview video. We'll be looking at U.S. data coming up on Friday and the outlook for the dollar. I'm Cristina Marujos. With me today is our investment analyst, Cristina Bartenidu. Cristina, the core PCE inflation, the Fed's favorite inflation measure, is out on Friday. And of course, this is just in time for the Jackson Hole Symposium. What could we see in the data, and could the report possibly affect any policy thoughts policymakers might have over the weekend?
Good morning, Christina. The data will be for July, and the alternative CPI inflation survey has recently given some updates about how inflation evolved in the month of July. So perhaps the data may not be very surprising to investors, but as you said, this is the inflation measure that the Fed closely monitors. And besides that, the survey also includes monthly data for consumption and personal income, which I think will be the highlight of Friday's release, given the significant slowdown in new home sales and the latest disappointing business PMI numbers, which showed softer employment growth, subdued domestic and external demand, which put exports under pressure, and also softer increases, but still quite expensive input prices. So I think personal consumption and income data will be worth it to watch to get more clarity about how demand is performing, and therefore whether the recession risks are more real than we think. But forecasts are not very optimistic. Consumption is expected to erase June's rebound and return to 0.6% month on month from 1.1% previously. Personal income is expected to stay steady at 0.6%. The core PCE inflation is expected to decline a bit too, from 4.8% to 4.7%. That is not a significant slowdown. The measure, however, is still well above the Fed's target, and that could be another evidence that the cocktail of higher interest rates and elevated consumer prices has started to negatively affect consumers' appetite to spend. Now, about how the Federal Reserve will react to the data, well, apparently the weakness in the data is something that it shouldn't be ignored and will likely create some caution within the central bank's decision-making board, as investors are sensitive to recession risks. But again, I think the Fed will stay patient and see what its priority. Apparently, it's aware that supply constraints emerged from the pandemic, the war, and all the heat waves around the globe may further worsen economic conditions during the winter months. But that will potentially keep prices high as well for consumers. So inflation will likely remain its top priority for now, and that means further rate increases ahead. Now, whether those increases will be similar to those rate hikes delivered during the previous 2 months or softer than those, I think that here we will need more data evidence. The Fed could actually wait for the next non-farm payrolls and inflation reports due early September before its next policy meeting decision. So I think the Jackson Hole Symposium this Friday may not provide a clear direction about what the Fed will do next. Of course, it could highlight the recession risks. Powell could sound a bit more cautious about the U.S. economic outlook, but as regards monetary policy, I think he will remain somewhat neutral this time.
I think investors will really look at the tone Chairman Powell chooses over the weekend at the Jackson Hole Symposium. Christina, let's also turn to the U.S. dollar. It has been steamrolling in the FX market recently. Can this week's data further add fuel to the rally?
Indeed, the dollar was mostly up early this week until weaker PMI business numbers and home sales data put the currency under pressure yesterday. If personal consumption and income figures arrive worse than expected as well, I think the dollar could extend yesterday's decline. We also have some oil inventory data today, and also wholesale inventories numbers on Friday. So perhaps those numbers could also contribute to any downfall in the US dollar if actual results signal narrowing inventories. Otherwise, an upside surprise could provide support to the dollar. Well, if you look at dollar-yen, the pair is technically still within the bullish area, and the trend in the broad picture is still positive above August lows. On the other hand, euro dollar is still bearish near parity, although oversold signals have strengthened. So I think the US dollar has still, a downside correction in the US dollar could still be temporary for now, or at least in the short term.
Christina, thank you for joining me today. And thank you for watching this Forex preview here at xm.com.